SoFi investors, listen closely this week. Could be one of the most unpredictable and crucial weeks we've seen in months. The market is gearing up for a series of events that could shake things up for SoFi's stock price, from Federal Reserve speakers to key manufacturing data and a flood of earnings reports. This isn't a normal trading week. It's a setup where one headline could send the stock flying or dipping fast. So, let's break down exactly what's happening, what it means for SoFi, and how you can stay ahead of the volatility. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting with the big picture, we've got multiple Fed speakers lined up this week, and whenever they talk, the market listens. Last week, the buzzword was stagflation. This week, it's tariffs. After Trump's latest remarks, the topic has reignited concerns about trade tensions, but thankfully we haven't seen any major escalation between the U.S. and China over the weekend. That gives investors a small sigh of relief. Still, the uncertainty is enough to keep volatility high. When Fed speakers discuss inflation, rates, and economic policy, traders react quickly, and those reactions can spill over into growth stocks like SoFi. Next, let's talk about the data that could move markets this week. On Wednesday, we'll get the New York Manufacturing Index, followed by the Philly Manufacturing Index on Thursday, and then the Manufacturing Production Report on Friday. These numbers may not sound exciting, but they help investors understand whether the economy is slowing down or heating up again. Add to that the fact that a lot of key labor data is still delayed because of the government shutdown, and it means markets might be reacting more sharply to whatever data we do get. Now, beyond the data, we're also deep into earnings season, and that's huge. Analysts are already saying this round of earnings could be what pushes the entire market to the next level or confirms fears that valuations have gone too high. Big banks and major corporations are reporting this week, and their results could directly influence how investors view SoFi. If results are strong, we could see renewed optimism for growth stocks. If the tone turns cautious, SoFi and similar stocks might see short-term pullbacks. When it comes to SoFi itself, there's not much officially on the calendar this week. No new announcements or earnings reports yet. But there's something interesting going on behind the scenes. A post by Lucid Insider revealed that SoFi has been sending out internal communications hinting that SoFi crypto might be coming back on December 1st. That's big. For months, SoFi investors have been waiting for crypto trading to return, and it finally looks like the company is preparing to relaunch. The timing, though, is interesting. Right now, crypto sentiment isn't great. After the recent flash crash, the entire space has been flooded with negative sentiment. But by December, the market could stabilize, and that could make it the perfect time for SoFi to step back in and capitalize on a potential rebound. Now, even though crypto might already be partly priced into SoFi's valuation, a formal announcement could easily trigger new buying pressure. Why? Because once that news hits, analysts start issuing bullish ratings, retail traders jump in, and suddenly the fear of missing out drives the price higher. That's the psychology of momentum trading, and SoFi could benefit from it in a big way when the news becomes official. Looking at SoFi's current setup, around 9.37% of the company's free float, or about 110 million shares, are being shorted. That's not a small number, but what's fascinating is that short interest barely increased last week. Only about 3,000 to 4,000 shares were added on Friday. Considering it's very cheap to short SoFi right now, the cost to borrow is only about 0.3% annually. This tells us something. Even the bears aren't confident enough to double down. That's a subtle but important bullish signal. Last week's drop in SoFi wasn't really about fundamentals. The volume data shows that algorithmic trading, automated computer-driven orders, was the main reason for the downward push. You can tell by the smaller, frequent transactions that are typical of algo-driven activity. When algo trading dominates, it creates hollow volume. Prices move, but not because of real conviction. So that Friday dip, it was artificial, and in my view, it's likely to reverse. Now let's get technical. The bulls are targeting a move toward the 29-30 range, while the bears are betting on a drop to the 25 to 26 zone. The consensus seems to favor a mild upside. Some key resistance levels to watch include 26.24 cents, 27.68, and 28.58. If SoFi breaks through and holds above 26.24, we could see momentum build quickly. On the downside, 23.89 and 22.45s are strong support zones. If you're a long-term investor or swing trader, these are the levels you'll want to pay attention to when deciding to buy or average in. Another thing to note is that SoFi just closed below its 10-day moving average, showing some slowing momentum. But the good news is there's still a lot of buying interest near the 50-day moving average, sitting around 25s and 20 cents. As long as SoFi holds above that level, it remains in bullish territory. But if it breaks below, things could get messy, potentially testing the $23 range. Historically, though, SoFi has bounced off its 50-day moving average, just like it did earlier this month on October 3rd, and rallied higher, so watch that line closely. We're also just about 2 weeks away from SoFi's Q3 earnings, and that's when analysts usually start playing games with ratings. Expect some bearish ratings to pop up soon, not necessarily because the fundamentals changed, but because it's a common tactic to create short-term fear and push prices lower before earnings. We've already seen negative sentiment from a few firms like Barclays and Citizens recently. It's all part of the pre-earnings noise. The key is to recognize that these moves often backfire once actual results come out. At the end of the day, this week looks like a volatile but consolidating period for SoFi. I don't see new highs coming just yet, but I also don't see a breakdown. The stock will likely move sideways or slightly down early in the week, then bounce near that $25 zone and finish just under the 26.24 pivot. And honestly, that's not bad. Consolidation weeks are healthy. They build a base for the next big rally. Considering that some market voices, even bullish ones like Tom Lee, are warning of short-term pain in the overall market, SoFi holding steady would actually be a win. Plus, with earnings season underway and potential crypto news on the horizon, SoFi might be setting up for a strong November rally. So, here's the bottom line. Expect volatility, keep your eyes on those technical levels, watch for new crypto updates, and don't let algorithmic dips shake you out of your position. This week might not make headlines for explosive gains, but it could quietly set the stage for SoFi's next big breakout once earnings and the crypto relaunch take center stage. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.